Layn Credit University. My name's Conrad Layn. Thank you for tuning into the channel. I'm going to share another strategy on credit and wealth building tactics that can help you significantly build up your credit profile in a most exponential manner that I've seen work for me and for others. I'm also a business mitigation specialist. I have a background in finance, and I used to be a HUD certified counselor for a 501c3 nonprofit, assisting people with their credit and being approved for mortgage loans especially, and car loans. So I want to do my best to assist you if you want a business loan, a personal loan, a credit card, increasing your credit score if you want to get to that beautiful 800 club, or if you want to at least get to 700 club, or if you just want to increase your credit profile so you start increasing the likelihood of you being approved for business loans, personal loans, car loans, mortgages, and getting better rates and interest rates and APRs. So this is one of the first steps. Consider this: if you have a credit card, or especially if you have a mortgage loan or a car loan, consider paying the principal only. Meaning, for credit cards, it's a bit different. Credit cards, what I've seen significantly assist with some of my clients, my business consulting, is that I've seen that if they pay off their credit cards within that month, it usually grows, their credit score grows a lot further, and they get more positive feedback from the credit bureaus that furnish the credit score internally, and they usually grow at a more exponential rate of growing their credit score and credit profile and building a credit profile the right way. Same way goes for if you have a mortgage loan or a car loan. Consider, you don't have to do this, always your own due diligence, speak with your banker. You don't have to trust me. I'm just sharing my perspectives and opinions. It's up to you to do some deep research to see if I'm telling the truth, which I know I am. So, but consider this, consider actually paying off the principal only. So yes, when you make payments, especially for car loans and mortgage loans, you pay, it's already generated. Usually, say if you have a 30-year mortgage loan, it's already been figured out where it's a fixed rate pretty much. The same works for car loans. It's usually fixed rate. It usually has a bit of the principal and interest worked in there. What you can do is contact your maybe the financier or the one that furnished the bank loan for the mortgage for your home or property or real estate, or contact the financier or banking institution or financial institution that furnished the bank loan for you, and say, hey, I want to make principal only payments. Oftentimes, if you have online ability to log into your accounts for a mortgage loan or a home loan, from my experience, what you can do is you can actually usually apply principal only. Now, if you don't see a principal only payment option, call them and say, hey, do you have a principal only? And they might say something along the lines. They might say, oh yes, we do have a principal only. Okay, fine, we could definitely do this. Or they might say, we have an option where if you pay a little bit more over this amount, it automatically gets transferred to the principals only. Because what happens is when you pay a mortgage loan or a car loan, and even a credit card, if it goes past, say, usually that month, you usually pay interest and whatever you owe. So for example, say you have a monthly payment for a home loan of, let's say, $2,000 per month, right? Part of that $2,000 is going to be interest, and part of that's going to be actual principal only payment. The principal is just the balance you owe. So if, say the house is worth, say, $800,000, for example, that's the balance. But there's usually interest over, say, a 30-year time frame or a 15-year time frame that accrues that you have to build as well, because you're basically renting their money. You don't own that money. They allow you to borrow the money from them. They loaned it to you because it's a loan, and you pay them for that, for the efforts of loaning that investment to you. So you pay, it's basically a rent fee. So you just look at it that way. When you get a loan, a car loan, if you get a mortgage loan for a home or real estate property or a piece of lot or some type of parcel, it's basically you paying rent for borrowing money. Nothing wrong with that, perfectly legal, as long as it's not a subprime type loan where they're taking advantage of you, like what happened years ago with the whole real estate crash. It's pretty legal, actually. So what you want to do is, at this point, do your absolute best to pay off as much as possible. If you have to pay a little bit more, for example, say you have a $2,000 payment, maybe pay an extra $200. An extra $200, that's an extra 10% you're putting down. That compounds over time. You're significantly bringing down in a 30-year time frame, significant amount of money in regards to interest that you will have to pay. Especially the longer the loan, the more it actually is more significant, because you start seeing it compound over time. There's a lot of different calculators that you can go into this. I'm not gonna go in to get too complicated with that. We keep it simple as possible. But the point is, if you pay more than what you actually owe on the monthly payment, say for your mortgage loan or car loan, you basically get rewarded in paying less interest, people. Consider this. If you have a car loan, if you have a mortgage loan, if you're a real estate investor, consider paying more than what the payment is. Don't just take my advice. I'm not your financial advisor. I'm not perfect, but consider what I'm saying. Do your own research. See if what I'm saying works for you. So maybe it does, maybe it doesn't. But the goal is you want to save as much money in the long run, so that way you have more money to invest in stocks, save for a rainy day, put into your 401k, put into your RI, give it to your kids. If you want to invest, if you want to donate, if you just want to have extra money you just want to burn, however, or you just want to spend. If you pay towards the principal and make the right decision now, just by paying a little bit, even it could be 10%. It could even be $100 per month. It could be something so insignificant over the long term of say 7 years with a car loan, which is pretty typical. 5 to 6 years is pretty typical for people to have a car loan for, or some people have 15-year mortgages for homes, or 30 years is more common. It will significantly save you a good amount of money in regards to this. Consider this. Just want to share that tactic with y'all. I'm a business mitigation specialist. I'm not your CPA. I'm not your tax advisors. Don't sue me for this. I'm not giving you advice. I'm sharing my perspective, opinions, and ideologies and a different way of thinking that maybe you're accustomed to or maybe you're not accustomed to. It is absolutely for free. I'm not charging for this information. For free to subscribe to the channel. For free to like the channel, share the video, share the channel, and follow me on Instagram, Conrad Layn. Leave any comments, questions below. I'll do my best. I'm pretty good at answering questions. Welcome to my city of Los Angeles. Conrad Layn out. Peace.